Hi everyone, Darko here for your daily trade example. We had a trade on CAD Swissy and let us hear what I had to say about this trade and I will talk you through it. CAD Swissy, the yearly bias is more short than long, even though we might be due for a yearly retracement into some level of resistance like I mentioned in my previous PMA. We are nonetheless at a level of resistance on the yearly chart, not because we are trading yearly necklines, but just more of the bias. On a monthly chart we are at resistance, okay? On a weekly chart, this is where I see my signal, or at least what I'm interested in on my weekly chart. Very significant neckline, swing neckline, very significant swing neckline. We have a weekly ACAT. Okay, it's a bearish candle action nonetheless. Okay, I'm interested in this shorting opportunity until we hit this level. So that means if price is correcting itself in the wrong way, in this specific case downwards into this level of support, okay, then I will cancel that trade. Okay, in this specific case we are at resistance. We have a bearish candle action. This is a weekly chart. If I go down to my entry time frame, which is 2 time frames below, because the signal is, the level is on the 4 hour, so the weekly chart, and this is how I train my eyes. Okay, this is nonetheless a swing in here. We went up. Okay, this is a structure that made, when we left this area, we made a higher close. We did some complex pullbacking, okay, and then we did this. That's structure damage. Okay, you can call this whatever you want. If it's a head and shoulder divergence, you know, call it the name of it is not relevant. The relevant is what is price doing at which level. Okay, so this is definitely a level that I will be watching for a shorting opportunity with a high stop loss aiming to the downside. Because I'm unsure about the trend and the underlying bias and all the goody stuff, there is no problem having hands-on. Hands-on doesn't mean you need to be at your computer. Hands-on means that you need to check on your charts every 4 to 8 hours. Well, that's good enough for me. Okay, so yeah, this is definitely a trade that I will be watching. There you go. So I talked about this trade in great detail in my weekly PMA, and you know the reasons behind it. We got filled in here. Okay, and this trade needed, let me just show you, from the entry level to this natural stop was 40 pips plus 20. This is a low volatility pair, so around 60 to 65 pips. Retesting this neckline was over 90 pips, so that means we are more than 1-to-1. Okay, so in this specific case I was very aware of the trade management rules that I'm teaching, so I took 50% of risk reduced and obviously got stopped out on the rest. So this was a winning trade regardless. Okay, and it's important to show you that not every single trade will be a home run. Depending how you manage specific trade, you know, even though price is going against you, that trade could be a winning trade. Or in this specific case, I'm very objective. The trade was a winning trade, and I went through the trade management rules hands-on, and price is retesting this level. We are more than 1-to-1. Then the trade can never be a losing trade. We took 50% off, risk reduced, and got stopped out on the rest. And this was a reduced win trade. Okay, let me see here before I finish this video. Make sure that you listen to our podcast. I can promise you that this podcast will save you a fortune. Okay, just have listened to the first episode before you make up your mind, and let me know what you think about it. Okay, and then obviously if you are not been sending a connection request on LinkedIn, make sure you do so. I'm pretty active on LinkedIn, and I'm more than happy to have you on my connection list. So I hope you enjoy this video. If you so do, hit the thumbs up. Send some positive vibes, and I will record more videos for you. Okay, thank you so much for listening, and I will talk to you soon. Cheers.